recovery, we shall overcome. Quick recovery. So today I want us to do some abracadabra and look at two topics, two in one. And basically, this is about international finance and risk management. So international finance and risk management. International finance and risk management. Once you write that title, can you kindly put your thumbs up like this live? International finance. When you talk about international finance, then we must also be good at risk management. We must be good at international risk management. Thank you very much. Ladies and gentlemen, I would want to assume, even if you have ever attended any class that I've taught this topic of foreign exchange, I would want you to know that you knew nothing at that time and you knew it wrongly. So you can get started there from the word go. So in this particular case, I would want us first of all to look at what we call exchange rates. Exchange rates. And I would want to be very basic here. From the mathematics that you did in primary school. In primary school, if, for example, in this case here, we have a Brian. We have here Brian has received, in this case here, 20,000 E like that, euro. And then we are given, in this case here, exchange rate. We are given exchange rate here. We are given exchange rate. So exchange rate in this case here is 160 Kenya shillings per euro like that. So we are required to determine Brian's money in Kenya shillings. Determine the cash receivable in Kenya. If this young man called Brian goes ahead and exchanges this 20,000, given this exchange rate, then how much do you think will he be able to get? How much do you think will he be able to get in Kenya shillings? Abracadabra. In Kenya shillings, how much do you think will he be able to get? This ninja called Brian. This ninja called Brian will be able to get how much? Abracadabra. So according to Modoni, he's supposed to get 3.2 million. He's supposed to get 3.2 million. 3.2 million. He's supposed to get 3.2 million. He's supposed to get 3.2 million. He's supposed to get 3.2 million. So, and I hope everybody is able to see that 3.2 million as I refill my pen here. I hope everybody is able to see that 3.2 million. Is able to see that 3.2 million. And of course, I can see Thito telling me, Mwalimu, you know what, that board is so bright. We need to dim it a little bit. And I'll do exactly that. It's too bright. It's too bright. It is too bright. I hope you guys are not dull. I hope you guys are not dull. How about that? Is it much better? Is it much better now? How about that? Great. Cheers then. Great. Great. Thank you very much. Much better. Thanks. Okay, great. So in this case here, then we need to come and exchange. So how do we exchange? We look at the exchange rate. So the exchange rate here is 160. The exchange rate is 160 Kenya shillings equals 1 euro. And this ninja has 20,000 euro. The ninja has 20,000 euro. So if you are to cross multiply here, then you will be able to give us, in this case here, if you cross multiply, it will be 160 times 20,000 divided by that. So then this ninja will be able to get a cool Kenya shillings 3.2 million. Kenya shillings 3.2 million. Thank you very much, Stanley. We are overcoming. Now, this is Brian. Today we are talking about Brian, and no one else. Today it's about Brian, and no one else. All right. So, ladies and gentlemen, this is what I would want to bring to your attention today. So why am I using Brian? It's because you guys know this ninja called Brian. He's a Kenyan, a student at RCM, and a Kenyan for that matter. So he's based in Kenya. So then we have again here, this ninja here, exercise 2. This ninja called Brian. So Brian, again, has 20,000 euro like that, euro. And then he goes to exchange this. So to exchange, he gets an exchange rate. He gets an exchange rate of 160 to 162 Kenya shillings, in this case here per euro. So again, we are required to determine amount receivable in Kenya shillings, Determine the amount receivable in Kenya shillings. So now he has gone to a bureau, and going to this bureau, he gets that board, which normally comes in red writings, right? Very well illuminated there, giving him 2 rates, 160, another rate 162. So then between the two, which rate are we going to use to exchange? Which rate shall we use to exchange? Because that is the biggest elephant in the house. That is the biggest elephant in the house. Do we work with an average? Most students tell me, Mwalimu, work with an average. Most students normally tell me, Mwalimu, work with an average. Now, ladies and gentlemen, one thing you need to know, whenever you're given money in form of a range like this, you must know which one is the buying rate and which one is the selling rate. Which one is the buying rate and which one is the selling rate. So the easiest way of knowing between the two, which one is the buying, listen. The easiest way of knowing which one is the buying between the two, you look at your home currency, the position of your home currency. Brian is a Kenyan. Brian being a Kenyan, in this case here, Kenya shilling is his home currency. And the Kenya shilling is on the left side. The Kenya shilling is on the left side. So if the Kenya shilling is on the left side, then the left number becomes buy. Automatically, that's how you interpret. This one here becomes what here? Sell. So you look at the position of your home currency. Home currency. This is what is going to happen, ladies and gentlemen, in this exam. You'll be given here 30 to 32 Uganda shillings per Kenya shilling. Per Kenya shilling. So between 30 and 32, can somebody using this illustration here, can somebody in this case here tell me between the two, which one is the buying rate? Which one is the buying rate? So hapa lazima utingise mkono. Unatingisa mkono kabisa. Unaangalia, mimi ni Mkenya, mimi si Uganda. Na Kenya shilling iko pande gani? Kenya shilling iko on the right. So if Kenya shilling is on the right, please, this is not a bag of potatoes. It's not a bag of potatoes here. You know, a bag of potatoes will always make an argument that I will buy at a lower price and then I sell at a higher price to make profit. No, this is not a bag of potatoes. Always you must work with the position of your home currency. If your home currency in this case here is here on the right hand side, then the right figure here becomes buy. The right figure becomes buy. This other figure becomes what here automatically then. So we must be able to know how to identify the buying rate. We must always know how to identify the buying rate. Once you have known how to identify the buying rate, then the entire thing becomes straightforward. The entire thing becomes straightforward. Now we go back to Brian's case. So Brian has 2,000 euros. And please, as we now talk about this topic, and I even encourage you guys to carry some dollars in your pockets coming to this class. Is there anybody who has dollars where they are seated there? Is there anybody who has dollars? Is there anybody who has dollars where they, or I'm the one who's supposed to be showing you dollars here to demonstrate like euros? How do they look like? So I would want you guys to think like international students. You are no longer, in this case here, local champions. You know, like our local champion will go to 𝐨𝐟𝐼R𝐞𝐫 Primary School. They go to 𝐨𝐟𝐼R𝐞𝐫 Secondary School. They go to 𝐨𝐟𝐼R𝐞𝐫 University if there is one. And then to make matters worse, they end up, in this case here, getting married or marrying from 𝐨𝐟𝐼R𝐞𝐫. So they are local what here champions. So here I would want you, but because like now I'll be using this language of foreign boyfriend, I would want you to know that you are an international person. We must agree from the word go. So you'll not be thinking like what here, a 𝐨𝐟𝐼R𝐞𝐫 local champion. That one we refuse. That one we refuse. All of us here now, we are international. All of us. We are international. So we are international here. So, and please ask as many questions as possible because of that internationality element. All right. Now here we are. So, Brian, you are looking at yourself like now international. What do you have in your pocket? You have euros in your pocket. So Brian, in this case, he will walk like a soldier, of course, looking at all directions to see whether there is anybody who is coming closer to him. This is good money. He doesn't want anybody to get close to him. Somebody can easily steal from him. So this gentleman will walk with this money to any Equity Bank in Kenya here. So because, why am I giving you that illustration? Why would I want you guys to visualize that illustration? It's because I would want you to see what we call the role of the bank. Role of the bank. I would want you to see the role of the bank in this transaction. So in this case here, Brian has the money in his pockets. Once he gets, in this case here, to Equity Bank, so Equity Bank will buy the euros from him. So in this case here, Equity Bank, so the bank will buy, the role of the bank. So the bank will buy. The bank will buy the euros from Brian. From Brian, at what rate? You guys have given me the buying rate. At the buying rate here, which is 160 euros, 160 Kenya shillings, 160 Kenya shillings, 160 Kenya shillings equals 1 euro. Remember when they talk over per euro, this equals 1 euro, 1 euro. So the role of the bank in this case is to do what here? To buy the euros. Remember, the bank will be giving this gentleman Kenya shillings. But don't make an argument that the bank is selling Kenya shillings to Brian. No. Kenya shillings is a medium of exchange. What is being traded here, the tradable commodity, is the foreign currency. The tradable commodity is the foreign currency. So please then go ahead and exchange. So remember, Brian has got this euros thing here. Has got 20,000 euros like that. So please go ahead and now multiply. So again, it will give us the same figure. 160 Kenya shillings times 20,000 euros times 20,000 euros all over times 20,000 euros. This times this all over 1 euro. All over 1 euro. So euros will cancel out, giving me 3.2 million Kenya shillings. Thank you very much. 3.2 million Kenya shillings like that. 3.2 million Kenya shillings like that. 3.2 million Kenya shillings. So up to there, ladies and gentlemen, are we together? What has been covered so far, Luciani, karibu sana. We have just started. And the first thing we have said, Lucian, is that if you're not married, please think about not getting married to a village champion. We have just introduced, and if you can do this great lady a favor, please take a screenshot of what we have done and send it in our group. Somebody please do that very fast. Please do that very fast until she says like this. We haven't done much really, but please take a screenshot, send it in our groups, and then she does like this. We continue. We continue. We continue. Village champions is what tunawachana now. I received the phone. You don't want village champions. Sisi tuenda wapi? Sisi tuenda wapi? So sawa. So nangoja Luciani aseme namna hii. Luciani leo hakuna masaa ya ku. You'll also be happy. Sisi ndio tuko, yes. You'll also be happy in this case here to get that screenshot. Get that screenshot. Sumbua hawa. We shall overcome. I'll give you a secret then of getting these great people, if you think they are so great. We shall overcome. So, but as Lucian gotten this, I think, mahali tumeanzia kwa group, as Lucian gotten. Just a screenshot. Don't worry about the handwriting. Actually, very bright people have very poor handwritings. So don't worry about bad handwriting. Just put a screenshot there. I'm also late. You'll be able to benefit now. You'll be able to benefit. You'll be able to benefit. You'll be able to benefit. Aya, sawa. Sasa tuko na Mudhoni here. So Mudhoni in this case here, wants to import. Let's just talk over a car. A car worth talk of could be an expensive vehicle. Talk of 40,000, just US dollars. Then we have exchange rate. Exchange rate. So the exchange rate here is 0.1. So that is 1 over, so 0.0.012 to 0.013 US dollar per Kenya shilling. US dollar per Kenya shilling. So we are required to determine the value of the car in Kenya shillings. To determine the value of the car in Kenya shillings. To determine the value of the car in Kenya shillings. So we have here Modoni. I'm using our local names here because I would want you to recognize that this is a Kenyan. A Kenyan. These are Kenyan. These are Kenyan. Modoni is a Kenyan. Wants to import a car worth 40,000, US dollars. And then we go to an exchange rate. So you see, now these are bright examiner. Instead of giving you the exchange rate in the normal way, like 132 Kenya shillings per, is giving it to you in a reversed fashion. Not many students will be able to get this correctly. Not many students will be able to get this correctly. I can see I have very good names here. I have Bill Clinton 𝐸. Those are the international names that I would want to hear today. International names. International names. Stanley yako si international. Yako ni kama Joshua. Local names. Local names. Purity is not international. It's a local name. We shall overcome. Sasa angalieni hapa. Jambo la kwanza kabisa ni kutingiza mkono, uniambie ni gani buy. Hebu niambie ni gani buy. Ni gani buy. Niambie ni gani buy. Kati hizi mbili. Ni gani buy. Tingiza mkono. Tingiza mkono. So wanasema wote ni 0.013. Inafaa kuwa 0.0 by the way. 0.013. Wote wanasema washajua always buy iko kwa mkono ya home currency. Mkono ya home currency Kenya shilling iko on the other side, right side. So the right figure becomes buy. This one here becomes what here? Sell. Truth be told, Modoni is with us here. I know she could be a rich girl, but she doesn't have 40,000 US dollars in with her. She doesn't have that money. What she has will be in Kenya shillings. So then I would want you to picture that out, that she has Kenya shillings. Picture that out very well and tell me what the role of the bank will be in this transaction. Will the bank be selling to her or buying? I can see 1, 2, 2 buys there. You see, this lady does not have what she has with her are Kenya shillings in her pocket. She doesn't have dollars, and she wants dollars to enable her import this vehicle. So in this case here, the bank will do what here? The bank will sell to her. So in this case here, because you must tell us that, role of the bank, in this case is to sell. So to sell at what rate? We can see the selling rate. To sell at 0.012 US dollar equals 1 Kenya shilling. So then how about 40,000 US dollars? 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 So if you cross multiply there, it will be 40,000 times 1, all over 0.012, which will end up giving me what figure? Which will end up giving me what figure? So according to Ruth, it is 307. No, Alex, is it 3.3 really? Alex, please multiply vizuri woye. Alex, angalia. It is this times this divided by 0.012. Woi, nani ananiambia ukweli? Kwa mimi ameniambia saa 3 mwalimu zote. Mwingine ameniambia sasa sijui nichukue gani. Sijui nichukue ya nani. Aha, Modoni because ni hesabu yake haiwezi kuwa wrong. So it is 3.3 million. It is 333. And remember this thing has got what here? Has got money in it. So it is 3,333,333 Kenya shilling. Kenya, you must always write the currency. You must always write the currency like that. You must always write the currency. So that, ladies and gentlemen, up to here, are we really together? Are we together now up to here? Cheryl is an international name. Bekilizi, umekuja late Bekilizi, inaitwa International Finance and risk management. International finance and risk management. We are doing 2 topics in a day, and we should be able to complete this topic by Monday next week. I would really want you to bear with me, because I would want to do this topic so seriously today. Then I would want to do this topic seriously. I don't teach on Saturday. Saturday I only have 1 class lunch hour. It's my rest day. Saturday, if you want Mwalimu to go all the way even up to Mombasa, Saturday is my day. All right. Although I have that lunch hour, I'll know in future what to do about that lunch. I don't teach on Saturdays. We shall overcome. But I would want to again request you guys, we have a meeting on Sunday. I don't know what time will be ideal with you guys, but I would want to have a class with you on Sunday, and then Monday double for AFM. Monday I'll not teach AFR. Monday I want to teach double AFM so that I can clear the 2 topics, all of them. And then I will begin proper revision. So first of all, we start with, let me just, so tuendelee hapa. So in this case, there is a gentleman called Onderi who is telling me, Mwalimu, give us more examples. Give us more examples. So in this case here, these more examples, tuko na our Bishop Wanjiru. Bishop Wanjiru has exported goods to Dubai. Goods worth. Nasema goods worth. In this case here, goods worth now what here? Let's talk of 30,000 dirhams. 30,000 dirhams. Goods worth 30,000 dirhams to Dubai. And then exchange rate, ladies and gentlemen. What do we have as our exchange rate? We have, ladies and gentlemen, in this case here, 30 to 35 Kenya shillings per dirham. These rates, of course, are hypothetical. They're hypothetical. So we are required in this case here, ladies and gentlemen, to determine the amount receivable. Determine amount receivable by bishop in Kenya shillings. So remember, Bishop, she's a Kenyan. Let's see, abracadabra, I'm giving you. I mean, these examples, Esther, all of them are the same. So try this one until you get it right. Try. I like what I'm seeing there, Maggie. Sam, wewe ndio kichwa ngumu wewe. We shall overcome. Okay. Right. All right. Let's see how much they're giving here. 900,000. I think everybody's giving 900,000. 900,000. 900,000. 900,000. The role of the bank is to buy. Thank you so much. The first thing that I will do, I have to assign the buying rate. So between the two, Bishop here, you know, Bishop, everybody knows Bishop. All right. So Kenya shilling is on the left side. So you shake your hand towards the left side. So even in an exam, you have to lift up your hand to shake your hand vigorously. So Kenya shilling is on this side. So we know that this figure on this side is the buying. So this becomes buy. This becomes what there? Sell. like that. So remember, Bishop Wanjiru has exported goods to Dubai. So Bishop Wanjiru will be receiving this money. Bishop Wanjiru will be the owner. Bishop Wanjiru will be the owner of these dirhams. So Bishop Wanjiru is the one who will go to the bank with these dirhams. So the role of the bank will be to do what here? To buy. The role of the bank will be to buy. So role of the bank will be to buy. So bank's role of bank is to buy. Role of bank is to buy. So it's going to buy at what rate? We know the buying rate. So buying rate is 30 Kenya shillings in this case here per dirham. So then I should be able to go ahead and do what here? And exchange. I should be able to go ahead. I can see so many guys who have come up with, these guys have changed. They're saying it's 105. No problem. We like democracy. That's very good. We like democracy. But trust you me, that figure of yours is wrong. This is the correct figure of 900,000. 900,000 is the correct figure. Because from here, once I know it is 30 Kenya shillings per dirham, then it will be 30 Kenya shillings equals 1 dirham. How about, in this case here, 30,000 dirhams? So if you cross multiply, it will be 30 times 30,000, which will end up being 900,000 Kenya shillings, which is really nothing in the eyes of this lady. This lady is a rich, blessed lady. So now, is that okay? Are we together? Are we together there? Yeah, it was an export. And again, I'm going to teach you even better as we get along. Because as we get along, I'm going to introduce some new terminologies. Great terminologies. Because as we get along, ladies and gentlemen, I'll be telling you, like, for example, this one here, like a foreign boyfriend. A foreign boyfriend buys dinner. A foreign boyfriend buys dinner, where this is foreign receipt. So anytime we talk about like Wanjiru has exported goods, she's expecting to receive foreign currency, foreign receipt, the bank will always buy. Foreign receipt. Anytime you hear of a receipt that this person has gotten money or she is expecting to receive money in foreign currency. So if it's a receipt, the bank will always buy from this person, because the bank will buy. A foreign boyfriend buys what here? Dinner. Buys dinner. A local boyfriend will eat your money. A local boyfriend will eat your money. A local boyfriend will eat your money. But don't worry about this. We shall be getting examples. We shall be talking about this when we look at a concept called money markets. When we look at a concept called money markets. It's too soon for me to introduce this. All right. It's quite unfortunate that I'm speaking this thing that loudly, and maybe there is a gentleman in this morning who took the madam's money, and he happens to be a black nigger. So it is international disaster, but you see, you have to use that language for purposes of just teaching. So if there is a nigger who is hearing that language from home and you have been eating your madam's money, don't come after my neck. No. It's just for teaching. It's just theoretical. Nothing serious. That is why you should be putting on your earphones, you people. You should be putting on your earphones when you are discussing this kind of what here, this kind of things. Ladies and gentlemen, then I would want us to go straight away to what we call hedging techniques. You have at least understood that. So now we have what we call hedging techniques. Hedging techniques. A hedge is what here? A hedge is a fence. It's written in the Bible. A hedge is a fence. A hedge is what here? Is a fence. A hedge is a fence. We shall overcome. Repeat how to determine buy, sell. Bekilizi, after repeating this, have you been able to pick it, or do you want me to talk about it again? Bekilizi, after using that example of Bishop Wanjiru, and to believe this question was asked a long time ago. Great. Thank you so much. And again, we shall get it here. So, ladies and gentlemen, there are so many bad things that surround us. So there is no way you'll be able to go and build a house somewhere without what here? A fence. It's only in America, Scotland, such kind of countries where you'll get beautiful homes, in this case here, without any fences. But in Africa, you must always ring fence yourself against what here? So many bad things outside there. Otherwise you'll be swallowed. So a hedge is a fence. And used in this case here, these fences here, to protect ourselves against what here? Risks. So hedges are used to protect companies. Hedges are used to protect investors, against what here? Against risks, against various risks there. Now, please, ladies and gentlemen, listen to me very carefully. We as investors, we shall be sending our monies to far places to go and work for us. On YouTube, I did a very good video where I explained and said that your money is your best employee. It is the only employee that you can send. It gets outside there and it fetches extra money, which it returns to you. I mean, interest. So money becomes the very best employee. But of course, as you are sending this money, others crossing the borders through what we call foreign direct investments, all right? Foreign direct investments, you are exposing this money to danger. You are exposing this money resource of yours, in this case here, to what here? To danger. That danger is what we call risk. Remember, when you release your money, somebody comes and tells you, hey, please, I want 1 million Kenya shillings. You give this money to him, thinking that you will return the 1 million plus maybe an interest of 20%. He ends up swallowing everything. That is the kind of risk that we are talking about. That is the kind of risk that we are talking about. That you may end up losing everything. The same case with foreign currency. You are an investor. You are a Bishop Wanjiro here. You have exported goods, in this case here, to some country in America. And then you expect, in this case here, these guys to give you, for example, 1 million Kenya shillings in 6 months' time. So you are somewhere there clapping because you think that in 6 months' time, the dollar will still be going at 169. So you know, ladies and gentlemen, that in 6 months' time, you'll be able to get 169 million in 6 months' time. But in this case here, in between here, abracadabra happens, and this dollar goes to what here? To 132. So if it goes to 132, you will only be able to raise how much? To raise 132 million. What is the loss that you have made here? Can somebody calculate for me the loss? Somebody calculate for me the loss. Look at the loss here. Loss coming not because you are a poor decision maker, not because in this case here you never exported goods. You exported goods, but in this case here, because of the fluctuations in exchange rate, you are losing a cool 37 million Kenya shillings. So you can imagine if your profit was only 10 million, assuming that you had exported a very expensive item and your profit was to be just 10 million. So your entire profit will be swallowed and you will get yourself in what here? A loss region. You'll get yourself losing here simply because of what here? Exchange rate, simply because of exchange rates. Fluctuate. I'm telling you, like right now, let me be very honest with you. There are very, very many people who are cursing, in this case here, our situation where the Kenya shilling has been able to go up very fast. Are you aware of that? That there are so many people who are really gnashing their teeth because of this exchange rate coming to 132 approximately. Do you know that? Do you know that we have investors who had bought these goods at that high exchange rate? And now they're not even able to sell here. There are people who are crying, I can tell you. When exchange rates in this case here fluctuate, either way, going up or going down, there are people in this case here who lose terribly and miserably. Like if there are people I'm sympathizing with this year, these guys who keep on saying that give us minimum prices for our coffee, for our tea, those guys in this case will be in a rude shock. Because at 132, maybe even going down to 115, you don't know. As it slides down like that, those guys are exporting and getting their cash in dollars. And when the dollar is losing value, they lose value, and yet the cost of production, as you know, cost of producing those tea, coffees, it's very high. So most likely, for the very first time ever, those guys would post huge losses. But why do they have to make losses? And yet we have got experts around. It's because most of them do not know what we call hedging techniques. Because if you know how to hedge, then automatically you will get to solve much of your issues to do with losses. Losses associated with what here? Exchange rate fluctuations. You should be able to hedge, and hedge very well for that matter. So then how do we get, in this case here, yeah, you can see that the guys here were not happy. One of them is Mimi Hapa. Yes, you can see this is very practical. Very practical. So one of the ways of hedging, so now we are looking at these hedging techniques. So mention there for us that they include number one, do nothing. Number one, do nothing technique. You do nothing technique. So if an examiner asks you about the hedging techniques, do you think you should quote like number one is do nothing? If the examiner was to ask you for 4 marks, give me hedging techniques, will you quote do nothing, or do you think it's an irrelevant point? Will you quote do nothing? Yes. Yes, it's a key strategy whenever the amount involved is insignificant. So this is useful whenever the amount involved is what here is insignificant. Whenever the amount involved is insignificant. I hope you have written that. So for example, ladies and gentlemen, honestly speaking, assuming in this case here we have Abdi Dabasa, Idaka Rude. We have here Abdi Dabasa, who is a new student here, a Kenyan. Assuming he was to give me great answers, and then I say, Abdi Dabasa, I'm going to give you $10 and we're in Kenya. So what do you think will Abdi Dabasa do? I mean, $10 is like nothing. It's like nothing. You can't tell me that now Abdi Dabasa will start walking all over these streets of Nairobi trying to look for places to hedge, to protect, in this case here again is a $10, in this case losing value because of exchange rate fluctuation. That amount is insignificant. Whenever amounts given are insignificant, you are always better off doing nothing. The only thing you'll do is to go and exchange your money in whichever bureau. Don't even look for 2 bureaus. You go to bureau A, how much will you give me for this $10? 130, mwingine at 120. If it is the amounts are insignificant, you do nothing and go and exchange your money during broad daylight. Exchange there. Peter Kamani umechange pale Dahabshil. Dahabshil is one of the best bureaus in town. Umechange Dahabshil, wewe ingia mahali hapo Al-Yusra, kula lunch, nyama ya ngamia, hiyo pesa inaisha yote namna hiyo. It's an amount which is what here? Immaterial. An amount which is immaterial. So in this case here, you do nothing. 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 Go eat home. Thank you so much. So number one, you do nothing if the material amount involved is immaterial. Number two, ladies and gentlemen, if possible, like now, for example, if it is these tea factories in Kenya here, they can dictate and tell those international buyers that we don't want you to pay us in dollars. You dictate, you invoice in your home currency. So you invoice in your home currency. It's upon them to look for Kenya shillings from wherever they are, and then they do what here, they get to pay. Then they get to pay. So in this case, ladies and gentlemen, we have number two, invoice all customers in any preferred what here currency. Could be home currency or the dollar. So invoice all customers in any preferred currency. For easy interpretations later, talk of home currency. Now, you remember initially, like when I was doing ACCA, this ACCA, guys, of course, ACCA is in 160 countries. So initially they would accept, people who are in Uganda to pay them in Uganda shillings, people who are in Kenya to pay them in Kenya shillings, in Somalia, in their currency, like that. Then one day they discovered that they were making serious foreign exchange losses. Up to date, after they made a change, which was long time ago, up to date, all their customers who are ACCA students, they pay them in the UK pounds, in their home currency UK pounds, regardless of the students' residence, where they're residing. Where they're residing. So regardless, you are paid in one currency, in your home currency. So in this case, you transfer that risk to who? To the client. You transfer that risk to the client, whether they are abroad or wherever, they look for money. Like they are investors who had started doing this. The investors, ladies and gentlemen, who had straight away, having noted that the Kenya shilling was losing a lot of value, they started invoicing us, like there is an apartment which I'm buying somewhere. They started invoicing us in dollars. Even in Kenya here, there are hotels, when after you go there and drink, even if it's a cup of coffee, when you go to pay, you can't pay in Kenya shillings. They're invoicing you in dollars. Is there anybody who has ever gone to a hotel where they paid in dollars, not Kenya shillings? Anybody who has ever gone to a hotel where they paid in dollars? But for example, tuko na Panari. If you go to Panari Hotel today, Panari guys will not invoice you in Kenya shillings. These guys will always invoice you in dollars. If you don't have dollars, they always have a small exchange bureau there, which will give you dollars at a very unfavorable rate. So when you go there knowing that I'll buy these things in US dollars. And there are many, many hotels in Kenya really here. Like in Mombasa, most of these big hotels, all right, they would want you to pay them in form of what here? Dollars or some hard currencies like that. And they dictate. So one day I was asking these Panari people, we are in Kenya. We have given you good space, good area here in Kenya. You are doing your good business in Kenya here. Why are you dictating that we have to pay you in dollars? Then they told me something which made sense. That they are servicing a loan which is dollar denominated. The top chefs are being paid in dollars. So then why should we accept Kenya shillings, which is weakening by the day, and then we start exchanging the same to dollars for a loss? No, we'd rather transfer that risk, in this case here, to clients. Let clients, in this case here, bear the risk of making what here? Making losses. But let me ask you a question. Do you think like it's every other company that can just wake up like this, and then you start demanding your customers to pay you in dollars and you survive? No. Like RCM, I'm so sure, and I tried this in ACCA. If you try telling your students, for example, to pay, remember these are Kenyan students, you tell them that go to a bureau exchange and then bring dollars to the school. You can't get students coming. Nobody would want to make that loss because there is nothing that is out of the ordinary that you are providing. You know, for you, ladies and gentlemen, to be able to demand dollars from your customers or any currency from your customers that most of them would really be better off having. You know, if I had dollars, I would be better off having this than just going to spend anyhowly in the normal kind of transactions. So the only thing that can make you to demand this kind of services, this kind of currency from these customers is if you are offering some niche kind of a product. A product in this case that can't be easily found. Like remember Panari, just behind Panari, you'll be able to see this skating. They have very good skating. The best skating actually in East Africa is found in Panari. Why? Because their skating area is ice. They have ice skating. What are skating here? Barabara hii ya lami. Napeleka mtoto hivi hata siku moja kuvunjika magoti jameni. Ile ni real ice skating. Alright? Hata ukienda kama mtu mkubwa, kwanza kama kuna joto hivi saizi, unaenda kwa hiyo ice unaanguka chini, pap, unasikia mzuri sana. Ukipeleka mtoto once, they always want to be taken there. Now because of that, and given that now we have some expatriates here in the UN and whatever Canadian embassies who are used to real ice skating, they always find themselves in Panari. And what currency do they have in their pockets? It is the dollar. So the fewer of us Africans who would want to go and enjoy there, then we'll be told, hey, you go together with these guys in the same WhatsApp group, pay us in dollars, pay us in dollars, pay us in dollars, pay us in dollars, like that. Luciana anasema alienda mgongo ikamuuma a whole week. But don't you think it's a good place then for exercise? Don't you think it's a good place for exercise? Because it means that really Luciana ulikuwa umekaa bila exercise sana. And ingekuwa ningerudi like the following day or immediately, maybe within a week, it's a very good place. Very good experience. Very good experience. Actually, you should have it like when you guys pass AFM, all of you, then we should be able to like offer you like partial sponsorship for us to go there and enjoy, for us to go there and enjoy, so that you'll be able to realize that, hey, there, people pay in dollars. People pay in dollars. First time lazima uanguke, yes. First time lazima uanguke. Now, ladies and gentlemen, you are trying to study what we call what here? Hedging techniques. How do you hedge to ensure that at the end of the day, you will not suffer any foreign exchange what here law? Push that loss to your customers. Tell your customers in this case here to look for what here, to look for your Kenya shilling and pay you. And then you'll not be having any issue of running helter-skelter to banks here to make deals there. At the end of the day, you may lose. You may lose. That is why, if you see, for example, like Dr. Ruto's government, the other day they had an oil deal. It sounded very good. It sounded very good. Because in this case here, they were saying that those guys in Saudi Arabia were to be paid in Kenya shillings. Were to be paid in Kenya. That's a very good way of hedging. But now we kept on asking ourselves this question. Saudi people, if they were to get a lot of Kenya shillings, where will they take Kenya shillings and yet Kenya shillings is not an international trading currency. So we knew that there was something fake there. Either they were cheated or they were cheating us. At the end of the day, they ended up paying what here? In dollars. In dollars. All right? All right. So I hope those examples are making sense, because we've said all of us in this case here are going to become international students here, international investors. International investors. We shall overcome. We shall overcome. We shall overcome. We shall overcome. All right. All right. Now there we are. Now from there we go to number 3. So number 3 is what we call the forward contracts. Forward contracts. So of course, under forward contracts, investors shall always arrange for what we call predetermined exchange rates. So a predetermined exchange rate, a predetermined means what here? In advance, A predetermined exchange rate is procured. We normally procure, is procured in advance. In advance. A predetermined exchange rate is procured in advance. So you walk to the bank, any bank in Kenya, tell this bank that, you know what, I'm not sleeping at all. I'm not able to sleep at night at all. Then they'll ask you why. You'll tell them, I've made this sale. This sale, I expect to receive $1 million in 6 months' time. So I'm not afraid of not receiving that money. That money I will receive. What I'm afraid of is the way this dollar is moving. Now it is at 132. I'm really scared. What if it goes to 110? What if it goes? So then the bank will be able to give you a solution. They'll tell you, you know what? We are willing to lock up a price for you, predetermined. Remember, this amount will be received in 6 months' time. So we are going to lock up a price for you. A price of how much? You agree, maybe 128 Kenya shillings to the dollar. Nevertheless, because of that kind of assurance we're giving you, then you must give us a commission. When you get that money, coming 6 months, 5% will be ours. 5% will be ours, on whichever rate you agree. So you are procuring an exchange rate in advance. Is that advantageous? Yes. even for planning purposes, for budgeting. Even if they'll take a commission, at least you know the commission, what the commission will be. And in this case here, you know what the exchange rate will be. So you can go to your budget and say, I'm expecting now to get this, and even now go ahead to appropriate that budgetary amount to the various activities like that. So here you have procured a predetermined exchange rate in advance. There is also a downside. Come those 6 months, exchange rate has gone, like now today we have the head of Kenya Bankers Association who has told us today, you know me, I normally read a lot newspapers like Business Daily every time, watching news. I normally do that at night. Most of the times I'm awake. All right. So somebody has come today and told us, you know what? This dollar, the way it is going, it's because of this Eurobond money that came to Kenya in the form of dollars, which was able to increase the supply of the dollars in the market to high unexpected amounts. So when the supply goes up, of course, when the supply goes up, the value of the dollar went down. So when the dollar went down, Kenya shilling appreciated like that. So he told us that this is what here is a small, kind of benefit you're getting currently, but we should be aware that in the near future, 5 to 6 months time, the dollar will really it will become expensive. So assuming in this case here in 6 months time, the dollar is going at 150. And here you are locked at a price of 124. What do you think will happen? It has gone to 150, and now it is at, you are being told here, you will be forced to buy those dollars at the rate you locked in. You are locked in. Because of which word? Because of this word contract. It's contractual. So you lose the commission you will pay the bank, and of course you will get an unfavorable unfavorable rate. You get an unfavorable rate. And this happened to, for example, Kenya Airways. Remember, for many, many years, Kenya Airways has been declaring losses, has been getting losses. One of the loss components is what we call a fuel derivative. They entered, in this case here, into some contract with some Saudi Arabian firm to buy fuel at a certain price, high price. That is the time when fuel was really fluctuating in terms of price, and it was going up and up every day. So they went up and locked up some price with that company in Saudi Arabia. And then what happened immediately after locking up a price, fuel started coming down to more than a half of the price they had locked up. And yet they were forced to be buying that particular fuel, a quantity of fuel, at that high price for 15 years. All right. So what I'm trying to tell you, ladies and gentlemen, as you get outside there and then you try to talk about hedging, you must also know that there are some risks about this. You must always know to do what we call diversification. Don't go and, for example, use forward contracts 100%. No. I'll be able in this case here to apportion the amount that I'm looking at, the risk. Have some of it under options, have some of it under this, have some of it in do nothing. And really, Kenya Airways has suffered. Initially, when they had Wazungu in the form of what here, CEOs, these guys used to, for markets that they were not very popular, for markets in this case here that they were not in control of the currency, they used to invoice in dollars. Now we got, in this case here, a Kenyan CEO. So this Kenyan CEO came and, like Nigeria, they say Nigeria is quite a big market and we can control there. There is no issue with dollars. Let's carry those people and invoice them nairas. So in this case here, their bank accounts were blossoming with nairas every day going up. And then all of a sudden, in this case, you know what is happening in Nigeria? There are no dollars. So in this case here now, Kenya Airways cannot bring back that money home here because they can't bring nairas home. And they can't even continue now. It's chaotic. All that is lost. It's lost. By the time they were realizing this, things had already gone way up there. So especially for those of you who will become CEOs of multinational companies, please, it's not everything that you open up to the local market. I've seen this. This is business that spoils. Like now, I used to have a very big college which used to be called Pinnacle. They had great ideas, those gentlemen. So these gentlemen With those great ideas, they went to Malawi and opened a very big branch over there. And they actually wanted to make it a university. So they started, in this case here, concentrating everything there. They never looked at repatriation of their dividends. They got students. But now they bring Malawian currency here, and those guys had locked up the economy. It forced them to close their Kenyan branch. So this foreign currency is something you have to be very, very careful. As you move around, you must always be aware. Like if today you start doing business with Southern Sudan, do you know that there is a caveat there? Do you know that you can't bring all the money back home here? There are quotas. You can't bring more than some dollars there. You can't bring more than some Sudanese pounds. So you have to be aware of that. You must be aware of that. Otherwise, you'll be a laughing stock. You'll be a laughing stock here. Even Ethiopia is a closed economy, yes. You can't revert the agreement. You can't, once it's an agreement, once it's contractual, Stanley, you lose everything. You lose everything. And no banks are very bright. Once, in this case, you enter into a contract with them, they'll be able to lock up that business with that international customer. That international customer cannot dare pay to any other bank. He has to take this money through equity. These guys are very, very clever. Very, very clever. They'll want letters of credit. They'll want very, very many things. Now, for forward contract, I would want us to do a question from our past papers. Are we ready for questions now? So, Modoni, remember contract? You'll be the one signing. You'll be the one signing and saying, hey, we would want this contract to run for this number of months. I like this topic. It initially used to be combined like that. In the new syllabus, they made them separate topics. I like it because you'll get 2 questions. This is a very serious topic. Very serious. Very serious. So let's look at an illustration. Yes. I would want us to start with 𝐨𝐶𝐫. May 2019. Question number 4A. May 2019, question number 4A. Once you get the question, please put your thumbs up like this. For those of you who have got this revision kit, we are looking at May 2019, question number 4A. May 2019, question number 4A. How many techniques so far? 3 of them. Do nothing. Invoice in your preferable currency. Number 3, forward contract. And now we are doing a question of 𝐨𝐶𝐫. So Paul is normally very, very quick to get these questions. 𝐨𝐶𝐫. Are we there? Are we there? Page number. It is page number 150. Page number 150. 𝐨𝐶𝐫 Limited. 𝐨𝐶𝐫 Limited. Thank you very much, Fancy. Thank you very much, Susan K. I hope this is not the governor. The governor, I'm a senator. Susan Kihika. May 2019, question number 4A. 𝐨𝐶𝐫 Limited is a Kenyan company. You must underline that. You must underline whenever you're given the residence. You must underline. Like, remember this question that came the other day, the one of Jackie Maribe. Jackie's. We were told that Jackie's is based in France. There's a question that I'll be able to show you there. So wakati wamesema Jackie's are based in France, wakatupatia the French currency versus another currency like Uganda. So students came out of exam room and told me, Mwalimu, you taught us very well how to shake our hands. You tried shaking our hands to nowhere. I then asked them why. That Kenya shilling was not given. Ati kulikuwa na France, na ingine ni Uganda. You know, when you are told, for example, this person is based in France, you stop thinking like somebody in this case here from Kisii Nyanza. Or a man from Maragua. Or a man in this case here from Cumberland. Straight away, you move your feet to France and know that your currency now is the France currency. So like now here, we've been told that this person is a Kenyan. 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 So 𝐨𝐿 Limited is a Kenyan company with substantial proportion of its trade with the companies in the US. 𝐨𝐿 Limited invoiced a US firm 60,000 United States dollars receivable in 3 months time from now. 3 months from now. So additional information, the following rate is 3% above the bank base rate, while the investing rate is 2% below the bank base rate. These rates apply both in Kenya and the United States. The bank base rates in Kenya, blah, 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 blah. Note 3. The exchange rates in the forex market between Kenya shillings and the United States dollar are as follows. So they want us to calculate the amount to be received by 𝐨𝐿 Limited in a forward contract hedge. At times they call it forward market hedge or forward cover. You're covering yourself forward cover. So then, ladies and gentlemen, what do we have here? Ladies and gentlemen, what do we have here? I only need 2 things to be able to answer this question. Number 1 is the amount receivable. Amount receivable. So amount receivable by 𝐨𝐿 is how much? Amount receivable by 𝐨𝐿 is how much? Amount receivable by 𝐨𝐿 is how much? Is 60,000 US dollars. 60,000 US dollars. In how many months' time? In how many months' time? In how many months' time? Thank you very much, Cecilia. Thank you very much, Leonida. 3 months' time. So because it is 3 months' time, then I need a 3 months forward hedge. I need a 3 months forward rate. Talk of forward rate. Forward rate. 3 months forward rate. Is there somebody, you know, they'll give you the spot in that table on note 3. They've given you the spot exchange rate. And then we have 1 month to confuse you. By the way, these examiners love confusing our students a lot. So in this case, yes, spot and 1 month, especially that 1 month is irrelevant totally. I'll not use it at all anywhere. At least spot, I know I'll use spot when I'm handling money market. 1 month, they're putting it there to confuse me. Ishindwe. So we go to 3 months. So I can see 3 months forward rate. 3 months forward rate is 102, 101 to 102. So this is 101. This is 101 to 102, 101 to 102. Huko juu amekuandikia Kenya shillings per US dollar. Kenya shillings per US dollar. Sasa unajua pia wanafunzi, vile huyu ameniambia mimi kichwa ngumu, pia saa zingine mnakubali tunatukana na kidogo, ndio tuna make maisha inakuwa lively. Maisha ikui lively inakuwa very serious, even in our homes. Are we supposed to be very, very, actually even in my house here, even in my house here, I have something very important here. I wish I would project it tomorrow. Family, a little bit of being crazy, a little bit of being loud, and a whole lot of love. A whole lot of love. That's a very good saying. Huwezi niambia sasa mko tu sasa ni ile SDM nini nyote. Yani kabisa kuna mtu anaongea maneno hapana. Unafaa kuwa crazy kidogo. So hata wanafunzi pia sasa wanakuwa kichwa maji. Kichwa maji. Sababu unapata umeenda ukaambiwa exchange rate. Exchange rate. Umeambiwa exchange rate is 169 Kenya shillings per dollar. Sasa unapata jamaa anatingiza mkono hapa kweli. Hapa anatingiza mkono. Sio ni kichwa maji. Sababu unatingiza mkono wakati kuna range hivi. Si wakati wakati kuna range. Unatingiza mkono wapi hapa? So unasema gani buy gani ina sell. So unapata kwa example tu ni msichana mrembo ameweka nywele zake vizuri namna lakini anatingiza mkono kwa rate ya 160 Kenya shillings per. Unatingiza mkono kwenda wapi? Hapa unatingiza mkono sababu kuna range, kuna lower limit na kuna upper limit. So Kenya shilling hapa iko 𝐨𝐿 is a Kenyan. So Kenya shilling is on the left. Kenya shilling is on the left. So if Kenya shilling is on the left, then this left figure here becomes buy. This one becomes what here? Becomes sell. Like that. Up to there, are we together? Are we together up to here? Are we together up to here? All right. All right. So then you see here, I've not picked spot because spot is today's exchange rate. I'm not going to receive my money today. I'm going to receive my money in 3 months' time. So I have to hedge this thing forward. I have to hedge it forward. And I'm hedging it up to the time I'm receiving. So I'll go for a 3 months forward exchange rate, which is 101 to 102. And I've been able to define in this case here buy and what here? Buy and sell. Haya. Sasa sababu hapa hakuna mwanafunzi kichwa maji. Watu wanaweza kutumia lugha, sababu wanafunzi ambao watakuja ku watch his video later hawata understand the context. There are times people can pick your communication out of context. Tuache hiyo lugha. Tuache hiyo lugha. Hebu niambieni hapa, then Kadzenga, if he is hedging in the forward contract, atapata pesa ngapi? So in this case here, remember, they have asked us a question. They have asked us a question. They have asked us a question here. Calculate the amount to be received by Kadzenga Limited using forward contract hedge. Using forward contract hedge. Using forward contract hedge. Yes, I will post it, CPA, Maria, Lizzie. Great name there. Great name there. All right. So I can see what Winnie is telling me there. I can see what Winnie is now becoming very bright. I don't know whether she's becoming bright towards, in this case here, exam time, because I think now this is brilliance. She has known that Mwalimu, the first thing I will do to be able to know how much this Kadzenga personally get, I must define the role of the bank. I must define the role of the bank. Don't guess. Don't guess. Role of the bank. So role of the bank. So role of the bank, in this particular case, remember Kadzenga, this amount is a receivable. So receivable from foreign boyfriend, foreign receipt. The bank does what here? The bank buys. That's what Win has told us. So the bank buys. So bank buys. Bank buys. So then the bank will buy at what rate? We can see the rate is 101 of Kenya shillings per US dollar. We can see the buying rate here. The buying rate is there. So then we have here 101 Kenya shillings equals 1 US dollar. 1 US dollar. How about, in this case here, 60,000 US dollars? How about 60,000 US dollars? So according to Esther, it is 60,000 Kenya shillings. 60,000 Kenya shillings, like that. You double on the line. 60,000 Kenya shillings, you double on the line. So up to there, are we okay up to there? Is there anybody who has a question? Please ask questions. Ask, yes, I can see we are together. All right. All right. And I don't know what normally happens. That is why we need to start now bringing even prayers, God close to us as we get closer to exams. Because we get students, for whatever reason, when they get this kind of a question on exam, most of them are not able to interpret it. I've never understood why. It is after they have done an exam, and then Mwalimu comes to do it like later on. That's why they say, that's very simple. How comes I never? No, this is a very easy question. Once I see it, actually, this is the question that I should always start with in an exam. Don't go there starting with the investment appraisals where you have very many cash flows. You know, this is a direct question. This one and the parity conditions and triangulation, they are direct questions. If I know it, I'll get 20 over 20 very easily. And I'm here to help you. All right. All right. All right. A good exam fever. Good question. Where will not one be used? This not one. Those notes on interest rates will come in handy in money markets. Money markets for forward interest rate, not interest, but forward exchange rate. We only need the money we're going to receive and the rate itself. Just that. Just that. So I don't want to do part B because part B is about money markets. Money markets, I would want a whole class. A whole class. So then what I would want us to do is to look at straight away another question that has got forward contract, and then we tackle it very fast. This one of November 2017, question 5B. November 2017. November 2017. Question number 5, boy. Question number 5, boy. November 2017. Question number 5, boy. I've remembered. Don't we have a class today at 8 p.m., all of us? We do. So then I have a whole chance of finishing money markets. I'm happy. I'm happy. And remember, it's a class which is mandatory for everybody, including the early morning students, yes. including the early morning students. Oh, who is this who is crying? Oh, yeah, who is this who is crying? Alango. Alango, why do you have to cry? I feel sad when I see my students crying, Alango. Why are they crying now? Why are they crying? Leo hakuna kupumzika. Not 7 p.m., not 7 p.m. It's 8 p.m. It's 8 p.m. It's 8 p.m. It's 8 p.m. Remember, like, the evening students are very nice. The evening students, them, for example, like on Friday when I call them to come and join the 5 a.m., when I call them to join the 5 a.m., they join, in this case, religiously. They don't complain. So also the early morning students, let's join these guys religiously, because if you can finish these things mapema, the better for all of us. The better for all of us. The better for all of us. May 2017, question number 5, boy. Tumekuwa free mode, okay? November 2017, question number 5B. Jackie Limited is a company based in France. This is the question. The company is based in France, so you should think like a French person now, where the euro is widely used. The company has recently imported raw materials from the USA and has been invoiced for US dollars to $40,000, payable in 3 months' time. In addition, the company has exported finished goods to the USA and Australia. The customer in the USA has been invoiced for US dollar $69,000, payable in 3 months' time, and the Australian customer has been invoiced in Australian dollar $395,000, payable in 4 months' time. The current spot and forward exchange rates are given there. So the current money market will not use those interest rates given because they are money market interest rates. Show how the company can hedge its foreign exchange exposure using forward market cover. You see here, even if students were able to interpret this very well, most of them again got confused. Why did they get confused? They got confused simply because they never knew that, here they have given us 2 periods. We have 3 months, and how many months? 4 months. So we need 2 forward contract covers done separately. So we shall do for the one of what here? 3 months. 3 months forward cover. 3 months forward cover. 3 months forward cover. 3 months forward cover. You see, there are 3 months and there are what here? 4 months. So remember, the question tells us, ladies and gentlemen, that the company has recently imported raw materials. We have imported raw materials. When we import raw materials, we are required here to pay. Don't be cheated there because it's using the word receivable. They're saying there that the company has recently imported raw materials from the USA and has been invoiced for US dollars $240,000, payable in 3 months. So I can see a payable there. I can see a payable there. $240,000, 3 months. 3 months. All right. So continue reading again. Continue reading again. So we are told there, in addition, the company has exported finished goods to the USA. They have exported, so we expect to receive money. And Australia, the customer in the USA has been invoiced for US dollars $69,000, payable in 3 months. So that word payable should not confuse you, because we exported goods to them, so we're going to receive. So we have a receivable of 69,000 in how many months? So this 69,000 will fall under this category of 3 months. So we have receivable. We have receivable 69,000 again, 3 months. 3 months, 3 months. Now, if you continue reading, they're telling us there, if you continue reading, they're telling us there, and the Australian customer has been invoiced Australian dollars of $395,000, payable in 4 months' time. So that is not our duration. Our duration for this part is 3 months. So in this case here, anything of 4 months is beyond our scope for now. We shall be able to work on that separately. Now, the biggest mistake you can ever do, when you have transactions falling within the same duration, you can't hedge them separately. You must consolidate them. You must consolidate them. So in this case here, you need to come and give us the net. The net. So the net in this case here, because I can see there is a payable, there is a receivable. So the net in this case here will be 69,000 receivable, that's an income, minus 240,000. So what am I getting, ladies and gentlemen, here? What is the answer here? Net. Net. And fortunately, both of them are US dollars. Fortunately, both of them are US dollars. US dollars. So 69 minus 240,000. 69 is a receivable. 240,000, of course, that is what here, a payable. So minus, it's a cash flow. It's a cash flow. It's a cash flow. So 171,000, thank you very much. So it is negative $171,000, and therefore it is 171,000 payable. So it's a payable. So basically, the company called 𝐨𝐿𝐼 will be required to pay this amount in the next 3 months. So at least now I have the amount payable in 3 months. It is this amount. So the next thing that I would need is the exchange rate, 3 months exchange rate. So is there somebody who can give this to me? 3 months exchange rate. Is there somebody who can give this to me? 3 months. 3 months exchange rate. 3 months, use the word forward. Forward. 3 months forward exchange rate. Is there somebody who is able to know this? 3 months forward exchange rate. Is there somebody who is able to know this? 3 months. I can see students giving me an answer there. Thank you very much. So ukienda pale vizuri, utaona mahali imeandikwa the current spot and the forward exchange rates are given here. We can see 3 months forward. Hapo mahali, uchana 4 months. Tuko na 3 months forward. So 3 months forward, ladies and gentlemen, is 0.9, 0.983, 0.9830 to 0.9, 0.9, 525. 0.9525 like that. What? Hebu somo uko juu kabisa. These are US dollars. These are US dollars per what? Ukiangalia uko juu tu kabisa. US dollars per euro. US dollars per euro. Na wewe home currency yako hapa ni gani? What is your home currency? What is your home currency? It is the euro. Tingisa. Which one is the buy? Tingisa. Which one is the buy between the two? Mwalimu umekosea, nimechukua wrong. Thank you very much. Thank you very much. Let me see nimekosea wapi. Oh yeah. 3 months forward 0.9520. Mimi nimechukua gani? 0.9. Nimechukua gani? 0.9525. Ya kwanza ndio nimekosea hapa. Thank you so much. Inafaa ikuwe 0.9520. Thank you very much, Stanley. So are we together up to here? Frida Ngatia. This is November 2017, question number 5. Question number 5, November 2017, question number 5. Are we together? Sasa hapa iko sawa ama bado nimekosea? Hapa iko sawa ama nimekosea? Hapa iko sawa. Yes. Thank you very much. So kama iko sawa, ukitingiza euro iko pande hii, home currency iko pande hii. Kwa hivyo hii ndio buy na hii ndio gani? Somebody sell. Na roll of the bank. Let me tell you something that you need to know from the word go. If it's receivable, the bank always buys. Whenever you see receivable, the bank buys. Payable, the bank sells. If I were you, I would have written that somewhere as a code, a secret code. Receivable, bank buys. Payable, the bank sells. So this is a payable, the bank sells. Payable, and therefore, the bank sells. The bank sells at what rate? At 0.95, at 0.9520 US dollar per euro. Per euro like that. US dollar per euro. Sales payable. Thank you very much for putting that in brackets that nicely. So then please go ahead and exchange. Take it away. It is your question now. Take it away. It is your question. Take it away. Take it away. Now, I hope, Rebecca, you are able to see why it was important for me to still work on this forward contract and not go to money market. It can never be negative. Remember, it can never be negative. It can never be. If you are getting negative because of this, ignore the negative always. Ignore the negative. That's why I ignore the negative and say payable. Payable. I can see Madam Lucy Ann crying there terribly, tons and tons of, or rather rivers of tears. We shall be able to help her. So this is 0.9520 US dollar equals €1. How about 171,000 US dollar? So you cross multiply, it'll be 171,000 times 1 all over 0.9520, which at the end of the day will give us what figure? Oh, have I picked a wrong one? Hey, nimechoka basi. Tumesema in this case here, payable is sales. Payable, the bank sells. And if the bank is selling, which data am I supposed to use? Mbona umesema ati always at sales is on the right, Lucy Ann. Na tulisema it's about Lucy Ann. Tulisema it's about, in this case here, Lucy Ann. Tulisema it's about shaking the hand. Oh yeah, Lucy. Per euro, where is the euro? It's on the right. So this becomes buy. And since this question is a payable, so if this buy and this sell, since this question is a payable, the bank will always sell. Since it's a payable, the bank will always do what here? The bank will always sell. The bank will always sell. Is our currency US dollars? How can they be US dollars and you've been told? You've been told 𝐨𝐼R𝐶𝐞𝐫 Limited is based in France and France is using the euro. Please read that question very well. Our currency is the euro. 𝐨𝐼R𝐶𝐞𝐫, wewe sio nani? Sijaona jina yake vizuri. Wewe si Mkenya, wewe ni 𝐨𝐼R𝐶𝐞𝐫. Wewe ni 𝐨𝐼R𝐶𝐞𝐫, who is based where? Who is based in France, which is using the the home currency now is the euro. So jitoe, kama ni Joshua Aura, jitoe jina yako kabisa. Mimi sasa ni 𝐨𝐼R𝐶𝐞𝐫. Where am I based? I reason like that investor. I'm based in France. So France, what is my home currency? It is the euro. So I'll shake towards the euro side. So is that okay now? Mtu anieleze, right ni buy or sell. You see, if you are given here, don't confuse yourself, and yet you are starting this topic, which is a very important topic for your exam. We said, if you are given here 30 to 32 Uganda shillings per Kenya shilling, wewe ni Mkenya. Kama ni Mkenya, currency yako iko wapi? Si currency yako iko on the right. Kama currency yako ni Kenya shilling and iko on the right, then the right number here becomes buy. The right number becomes buy. So this number becomes buy, because always buy is defined by the position of your home currency. And then this other one here becomes what here? Somebody becomes sell. If, for example, they gave you something like this, 160 to 162 Kenya shillings per dollar, and you're a Kenyan here, then automatically Kenya shilling is your home currency. Where is the Kenya shilling? Kenya shilling is on the left. And if Kenya shilling is your home currency and is the one that you're chasing after and it's on the left, then the left number becomes buy. This one here becomes what here? Somebody becomes sell. Buy and sell. So does it make sense now? Does it make sense here, Lucy Ann? You know, like now here, we have been told that 𝐨𝐼R𝐶𝐞𝐫, she's in France, which is making use of what here? Euro. So euro is the home currency. So euro is on the right. So this right number becomes what here? Becomes buy. Becomes buy. Becomes buy. Okay, so are we together up to there then? Are we together now? All right. So the gentlemen then, yes, great. Then ladies and gentlemen, now I would want you guys to try the 4 months one. We see. I hope here you are correct. You have been able to write for us the answer there. Try 4 months to one utapata ama utapata tukikosea, so what? Try 4 months. So we are through with 3 months. So try the 4 months. Try the 4 months. Thank you very much, Jane. Try 4 months. Try 4 months. So first of all, give me the amount. Give me the amount. Amount is how much? Imagine si kitu ngumu, utashika sana. Amount is how much? Yeah, ina mambo ya netting. This one is has been given to us directly. Amount is 395,000, isn't it? 395,000. Australian dollars. 395,000. Australian dollars, ASD. Thank you very much, ASD. Thank you very much. So then give me the forward months. Forward months. Forward months, in this case here, 4 months, forward exchange rate. Forward exchange rate. Are you aware of this? Do you see it down there? 4 months, forward exchange rate. Are you able to see it? 4 months, forward exchange rate. Are you able to see it? 4 months, forward exchange rate. Are you able to see it? I can see already Joanne, Min, and other students, they've been able to get the final answer. So the 4 months forward exchange rate is 1.9510, 1.9510 to 1.9540 euros. You can see up there, euros per Australian dollar. Euros per Australian dollar. Ebu niambieni abracadabra buy ni gani woye bila uoga. Bila uoga buy ni gani hapa bila uoga. Bila uoga abracadabra buy ni gani. Bila uoga buy ni gani. Abracadabra angalieni hapa Lucy. Euro is on the left side. Now in this case here, this becomes the buy. The left number becomes the buy. This other one becomes what here? Somebody the sell. There is one thing that you guys forgot to tell me. This amount, is it a receivable or a payable? This amount, is it receivable or payable? The 395,000. We exported goods. So you expect to do what? To receive? To receive. So we exported the goods, we expect to receive. We expect to receive. So it's receivable. And now with your deeper understanding, if it's a receivable, what do you think will be the role of the bank? If it's receivable, always the bank will do what? The bank buys. So bank buys. So in this case here, because it's a receivable, because it is a receivable, the bank buys. The bank buys. Then at what rate? Are you able to see the buying 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 rate? So the buying rate is 1.9510 euro equals 1 ASD, 1 Australian dollar. How about 395,000? How about 395,000 Australian dollar? How about that? How about that? I can see home rate. Thank you so much. So if you cross multiply, it will be 395,000 divided by 1.9510, which in this case here, somebody is telling me it is 770, 645. 770, 645. Are they cows? If they are cows, then they should be able to mow. If they are cows, then they should be able to mow. Is it multiply or divide? Is it multiply or divide? Why am I dividing here? We shall overcome. We shall overcome. So it is cross multiplication. So it is thank you very much for that. It is 395,000 times 1.9510, like that, which will end up giving us now that amount like that. Thank you very much, Becky Lizzie. Thank you very much, everybody. I'm so sure you guys have seen lots of what here, lots of dust. I'm so sure you guys have seen lots of dust, but we